Mic check. How's it, guys? Please, can someone just quickly let me know if I am loud and clear, if everyone is watching? I just want to make sure that we don't have yesterday's problem of no audio. I'm live. Just telling everyone in the group right now, I am live. Please confirm audio. Right. Hope you guys are doing well. We're just going to give us about, 30 seconds, 30 seconds, 30 seconds, and then I promise to start. Just want to make sure that I am audible. Yesterday, I had a 10-minute intro that nobody heard. So it just needs one awesome human being to give me that feedback, and then we can start. Mic check, mic check. Okay, there's almost no one. So I'm gonna start now, and then when people start joining in, I'm going to just hope and assume that they will, confirm at some point. And my laptop is actually acting out all weird. Right. So shake my hand, everybody. Good afternoon. This is another war room take. Yesterday, the war room was very specific. Yesterday, we dealt with clear. All right, fantastic. Thank you so much for the confirmation. All right, cool. So people are starting to join the live now. Yesterday's war room, please watch it. It's absolutely imperative that you watch yesterday's war room, only because as you can see right in front of you right now, blood on the streets. Right, markets are completely in a terrible panic. And this is literally how things stopped on Friday. I wouldn't be surprised if tomorrow, first of all, if we open with massive gaps right across the board. So yesterday's war room dealt with a lot of the stuff. Yesterday's war room really, hey Titus, good to see you, buddy. Good to see you. Good afternoon, man. My thoughts on the market crash, stock market crash, what I think I will be doing. I was also, I think, sincere and honest enough to tell you that I don't know what I don't know, and I know nothing about geopolitics and war. I am not so sure if this big war that we're dealing with right now is a real war, or if it's just like a front, because that happens quite a lot. I can confirm today that America, Germany, Italy, Europe, and a bunch of many other countries have started closing down their embassies in the Ukraine, have started, this is interesting, have started, telling their citizens to leave, right? I can tell you that for a fact. So that could be a sign that there's going to be a big war. I don't know. But yesterday's war room just covered what to do during market crashes, my understanding of this particular market crash, and just overall what I think is going to happen, in the markets. So please do check it out. Right. So today we're going to have a normal war room. Shake my hand, Alan. Right. Today we're going to just zone into just operating as normal as usual. And the reason for that is up until there's massive confirmation, there's nothing more we can do. Right. I can tell you that the markets are not going to shut down because of a crash. Right. So if there's a crash, we want to be on the right side of the crash. If there isn't a crash and it's a trap, we also want to be on the right side of the traps, exactly. But you can see, tech stocks are down, growth stocks are down, energy is up. So I told you guys yesterday, right? So I didn't say specifically energy. Yesterday I just spoke about oil, but it's going to apply to everything. Everything energy is going to go up. It's just a thing that happens during a financial crisis, right? Energy normally goes up. So Eskom, oil and gas, Exxon, not XCOM, right? Oil and gas, generally speaking, will always be a big winner for a while, right? And then later on, you get a massive, massive recession, right? So I dealt with that stuff yesterday. All right, so it's honestly not looking, great in the markets. When it comes to crypto, right, we've got just the usual, right? Nothing too crazy. Bitcoin, pausing at those 42,300 levels. I still think there's going to be some type of downward flush. I'm happy to be wrong. I'm not in any type of significant trade where I am invested, in any either direction. My My interest in Bitcoin right now is Bitcoin falling to about 30,000 US dollars, 33,000, 30,000, right? So if it does that, I'm going to start buying. Between now and there, I am dollar cost averaging, but at the moment, not into Bitcoin. I'm dollar cost averaging into Ethereum. All right. So I've done videos on dollar cost averaging, right? So between now and my target of 33,000, which is somewhere down here, right? I'm just buying as much Ethereum as I can. So if I have a good trade, I withdraw, buy Ethereum. If I have extra cash, I withdraw, buy Ethereum. And that's essentially just pretty much how I'm going to keep doing this. And when Bitcoin comes here, I'll see if I need to liquidate any stocks to get more cash, right? So the game in any crash, market crash, is cash is king, because you want to have as much cash as you can to buy the dip, right? So you want to start saving for that, right? Because it's not going to happen overnight, but it might happen very fast, where your last bus stop to buy. So if Bitcoin hits this 33 area and bounces up, I'll have bought. If it then comes climbing down to the 30,000, it won't bother me. I'm going to buy again. I'm talking investments, not trading. Investments, not trading, right? I'm not saying I'm going to be trading this to the upside when it's clearly, launched to the downside. How price reacts to this level, this daily demand on 30,000, is going to be telling. If markets can remove this, happy days. We're coming back to 20,000 US dollars. Everybody in the crypto space does not want that to happen, except for me and another guy in our senior traders program called Carl, right? Everyone is just tired, right? There's a belief that Bitcoin is so high, all right, high enough now that if a market crash was to come, that we would see price playing here, that it wouldn't go below 30,000 US dollars, that we've done the upward rallies, and that's not how I understand markets to operate. Markets can go as far low and as far high as they want. Our job is never to control the market. Our job is to simply understand it and do what it does, right? But just so we're all clear, because I didn't tell you this yesterday, we are literally sitting at about a 38, almost 40% decline from the previous all-time high. And in the stock market, we are slowly but approaching a 20% decline from all-time highs, right? So in the crypto market, we really want to see a nice wipeout. Like a 60% crash is always a nice golden number, which is also a big confirmation of a bear cycle, right? A bear cycle. A lot of people talk about bear markets, but I don't think they know what that means, right? So you get bear cycles even in a bullish market. Bitcoin is extremely bullish as far as I can tell. Bitcoin is bullish as long as it maintains this level. Let me show it to you real quick. I'm just quickly wrapping up yesterday's session. Yesterday we talked about market sentiment and fundamentals and all these cool things, right? So as long as Bitcoin doesn't break below 28,500, you guys see that here? You see this here? Making contact with this absolute low that broke the weekly demand. And if you're a 365 trader, that's important information, because you already took out this weekly demand. We know you showed your hand a long time ago that you were going to have a downside. Now, this is the last leg of defense for anyone who is wanting to know the bullishness of Bitcoin. It's 28,500. I brought that up yesterday, but I remembered as I was reviewing the war room that I actually didn't show you the level and explain to you how I got to that, except for the fact that supply and demand curve. But normally this is the lowest low in this entire area, right, when Bitcoin was last here. So if price comes back, and there's a lot of time, this was done in June, the 21st of June, right? There's a long time, right? We could get this done before June this year, right? I'm pretty sure it is very plausible if price was to come down to get down quickly. Last thing, tomorrow there's a big meeting, FOMC emergency meeting that could shake the markets. So we won't be doing anything too crazy, right? And happy Valentine's Day to everyone in the academy for tomorrow. Right, guys? So today I want to actually just quickly address a lot of the assets that we didn't get a chance to look at yesterday because of just my ability to talk nonstop to a point where we ran out of time. And I want to start off, as carefully and as accurately as possible with this thing in front of you here. All right. And I got an email from one of our students who said, I sent out a newsletter, by the way. So if you check your emails and you didn't receive a newsletter from me, it was just a tester, please do communicate with me or my teams if you want to receive our newsletter. they're completely for free. Market review, just quick summary. I just want to get back to blogging again. And the reason for that is I seem to be suffering currently from writer's block because I haven't written in a long time and I'm editing the last 42 pages of my book. And so the way to get out of a writer's block is to just write. So I've decided to start a newsletter that will just get me communicating again in a written format until I finish. So if you want that, please do check it out. Right, now, I did bring this up yesterday that, listen, guys, there's some data missing, which is very suspicious and very weird. One of the data that's missing in the COT report for this week is pound USD. And it's actually one of the only assets that are behaving weirdly, right? So Euro USD broke through its daily supply, right? Just like we spoke about in the previous war room. Here in the private students group, we're talking about how this area was meant to be crashed during the ADP, NFP time period, right? This area of value here was supposed to be removed. It wasn't removed, but I did indicate that we were right not to take the trade because there wasn't much money made. Unless if you're an intraday trader, right, you would not have even achieved 1:3 because your stop loss is outside your entries here, and at least you'd need price to move all the way down there for you to call this a very good trade, right? So just because the supply was not taken out doesn't mean our instinct not to trade it was bad. It was a very good instinct because price really just wasted your time, right? So you'd have paid swap fees for the whole week only to be in the negatives right now. Prices returned, done a massive U-turn, which is what we want to see. We want to see price remove the supply. We just thought a strong dollar based on NFP was enough. And then we thought a strong dollar based on CPI was enough, right? And this asset is playing mind games. And then I found it interesting that they refused to release or let us know what's cooking. Right, so we had pound USD, NZD USD, and USDs are come out blank, right? And I'll address those as we go. Now, looking at the DXY, because that's generally our campus, we can see a couple of things, right? And I didn't write the net change here. I'll have to calculate the net change, right? Guys, net change, right, is referring to the change between the week, the past week, all right? I just want to be very clear about what this net change is. So when you see net change for the 8th of February, which is the latest data on our spreadsheet, these numbers here in net change in this column, I hope you guys can see this clearly. All this stuff here is referring to the difference of net positions between the 8th of February and the 1st of February, right? So I'm tracking the net change, which means next week when I get new data for the next week, there'll be another net change column, and that net change column will be comparing COT data for the 15th of February being compared to the 8th of February. All right, so as long as we're all clear on what net change is, net change is just orders. What's the difference between last week's orders and this week's orders? Because that quickly allows you to see momentum buying, momentum selling, right? Well, whichever one is happening. So for example, let's go with AUD USD. AUD USD had 18,800 buy positions, 98,000 sell positions. So there were more sell positions. Most of us are currently holding AUD USD sells if you got triggered last week. Now, on the short end, when we totalize and work out the percentages, 84% of smart money's money is geared towards selling. And we know that in the academy, we love taking trades when price finally gets to this overheated area of conviction. This is where we want to be. When prices between 80 to 100%, there is a very strong long or short bias. 84% is a very strong short bias. 70 to 79, I can do stuff there sometimes, but it's just massive patience and it can be a hit or miss. But a full-term burner run like this is perfect, which means if I had this done from last year, you would have to have seen these orders slowly but surely build up, slowly but surely accumulate. Is that better? Can you guys see that? Right, hope you can see that. No, that's terrible. What have I done? Everything was perfect. Sorry guys, I actually thought that was gonna give me, what's it called? I thought it was gonna give me a whiteboard. I was looking for a whiteboard, and then it did not do that, right? So I'm just gonna have to go to this version because I can't seem to find the previous version, right? So hopefully you guys can see everything on the screen, and then if this is a problem, I'll try to. Nah, that's not gonna work. Right, so there we go. So you actually, can you guys still hear me? Because I know it gets weird if I remove the mic thing. Can just someone just confirm sound? Sorry. I just want to make sure that everything is crystal clear on the screen. Can someone confirm sound? Because I know I've made that whole thing disappear, the mic thing there. Can you guys still hear? Can you still hear me? Please confirm as quickly as possible. Somebody. Can you still hear me there, guys? Mic check. Is that a no? Yes. All right, cool. Thanks, Titus. Thank you so much. Right. So as long as everybody can still hear me, that is absolutely perfect. Now, moving forward, we have the situation here where if you look at AUD USD as an example, right, you've got price head literally 84% short. Now, look at the net positions, minus 79. So overall, this was hedging and blah, blah, blah. There were 79 positions, 79,000 positions on the sell side. So net change is saying, look, man, they even added an extra 5,912. I'll calculate all this stuff for you. It will always be there on the spreadsheet, which means if they were selling on the 1st of February, on the 8th of February, they've actually increased their sell positions, quite tremendously, as you can see there. So 79 is obviously smaller than 85. So that's all net change means. That's literally all net change means. Right now, real quick, our main highlights, and maybe we should create watch lists, right, is the dollar, AUD USD, USD Swiss franc, and USD JPY. I say that because obviously there is now very serious conviction on a direction of price. We still need to look at the chart holistically. We still need to do our module 1, etc., etc. But this is just a snapshot of what markets are doing, right? So there's really not much else to see. I mean, I did go through some of this stuff yesterday, right? So I'm just going to start with our first asset for the day, and then we'll take it from there. Right, cool. Thank you so much for the sound check confirmation. I'm extremely paranoid in talking for hours by myself. Right, so NZD Swiss franc, we have a weekly demand and a daily demand according to my notes here. Inside this monthly demand, we can see that the month of February is positively reacting to our analysis whenever it was done. I am not in any of these trades. I am not in NZD Swiss franc. Don't know why I'm not in it, but I can see there was some analysis towards it. Right, so just real quick, price is leaving a governing demand, approaching a governing supply. Apart from that, looks like we are in a sell profile asset and price is trying its best to change. NZD, because it's NZD, and because there is the possibility of a big market crash, right? It's nice to see things that pop up during a crisis. This is the COVID crash. Things that fight during a crash, those are the things you want to buy. Those are the things you want to really put your money's worth in. This particular asset is still trying to leave a governing demand, right? So it's quite in line. There was a COVID run from March 2020 to March 2021. Right, I'm not even going to waste my time. You already know 3 months, 1 year, 10-year demand to supply, right? Bearish off in supply to this value-based demand. And it took a year for price to get there. And then we had profit taken for a couple of months. Price tried to save itself. And then we created a new supply. So now we've got a low and a lower low here. And then price went straight to a demand. And if price is to leave a governing demand, it must come back and retest that supply. That's my current feeling, right? Coupled with the fact that things are extremely uncertain right now. And this thing seems to react very well to crisis. Let's check in 2008. Maybe in 2008 was a different story. That's 2024. That's 11, There we go, crisis. Straight off the bat, after the meltdown in 2008, 2009, this thing rallied into 2010, came back to the demand and rallied on. Most assets, euro, pound, etc., from 2008 all the way to 2016, 17, 18, 19, 20, just were in a downtrend. This one literally took the crisis on the chin and then rallied up. So this asset seems to like buying in the middle of a crisis. That's my humble opinion. Right, we're living a governing demand, right? We're living a governing demand, and because we're living a governing demand, it is absolutely imperative that we most likely lean towards buying. That's what weekly looks like. Weekly seems to be struggling. Weekly seems to have also made contact with the Talita area. Talita area lacks conviction, right? So when I say lacks conviction, I mean price went in, rallied into those order blocks we saw in normal candlesticks. But because they don't show in volume-based trading, I'm pretty sure our Talitha area will break, which is in line with our module 1 teachings that there's glass effect anyways when it comes to PCPs. So we don't expect them to hold forever. That being the case, then we need to see if we can catch the retracement down, or is it now too late? And if it's now too late, we need to figure out where to wait next, right? If I could draw this area as carefully as possible, it would look something like this. I think I'll draw it like that, and then I'll realize the imbalance is quite mismatched. I'm okay with someone wanting to draw it like that, as long as you know that your area of competition is all the way down here, right? Something like that. But for me personally, the way I drew it the first time, using one of the PCP candlesticks, right, in the pattern. So if it's downtrend, I'm looking for that green candle, right? I'm looking for something like that. Now on the daily time frame, right, you can see price made contact there. There's a lot of sell pressure on the weekly. This is what we have on the daily. I'm going to clean this up a little bit. Right, so my point of sell here for now is just weekly, right? And somewhere inside my weekly is a daily supply, which we still need to deal with, okay? It's quite ugly. It's quite ugly, and there's been excessive trading in this level. If you look at that bearish engulfing candle all the way there, right, you know, there's been multiple rejections. I don't think price will hold, but nonetheless, it's there. It's there because we're looking at it from this perspective as well. So what I'll then do is I'll draw this, but I know for a fact I have no interest in selling. I literally have none. I don't like buying right now because it would be so much nicer to buy and not have to use my own capital to go against the supply, right? I would like smart money institutions to remove their own supplies. We'll do this as quickly as we can. If it starts to slow us down, then I'll stop. So let's just quickly run to the COT data. So as soon as the COT data starts to slow us down, I'll stop. But I just want you to see stuff. So I'm going to look at NZD. Now, we want to buy. You guys understand this, right? The governor is buying, which means we are NZD bullish. From an analyst perspective, we want NZD to be strong and Swiss franc to be weak. That's what we want. We now know we're in a situation where there's a weekly supply and a daily supply, and we want to buy. Does it mean we start buying now? Where do we start buying? Now, let's look at the data. Right, so we have, you know, our sentiment indicator tells us that, you know, since about 23 November last year, you know, there's been, 30 November last year, there has been, you know, a lot of good money on the table for the buy side. This is pretty much the banks and hedging institutions. There's been enough money leading towards buying. Makes sense. We are now finally in a governing demand, right? And we can see that throughout that time, price has been rallying up and actually running a lot of momentum to the sell side. So institutions right now are more leaning towards shooting this thing. It's not a very strong bias, right? It's not like a 70, 79 or even an 82 to 90. I'm just watching momentum here, which means all this momentum to the sell side could have been what is necessarily generating this, right? And if you look very carefully, when this momentum started, I'd start off with like something like 60%, 21 December. Let's see if we can find 21 December, 14 December, there. All right, so the first time they became very serious about momentum selling, 21 December. I want you guys to literally see it. I know I'll do this for one or two assets and then you guys can do it by yourselves later on. I just don't want us to miss out on a lot of trades. But from here, from about 58%, 60, 63, 66, you see that momentum, right? They're starting to cool off towards the end, but I'll only pay attention to the cooling if they drop it below 60. But since the 20 something of December, I don't know what we say here, 21 December, right? There's been a lot of momentum, more sell positions as they reduce their longs, all right? Sentimentally, institutions are still pushing money forward. But for now, there's been a whole lot of sell positions going on. There it is there. There's 21 December. All right. Markets rallied up into this area of value. And then the selling kicked in, a strong rally up. This is the 10th of January sometime this year. And then that momentum, those constant sell orders eventually push price down, right? Back to this area where all that momentum was created. Price has now made contact and dropping again. I personally, like I said, because they're not yet fully committed to reversing their longs yet, right now, yet, right? Number one. Number two, I don't even think we got that data out of how NZD USD stands, right? So NZD USD was there last week. This week, they didn't take it out. Okay, so I'm very cautious about this because I'd have loved to see how NZD is doing against the dollar. All right, because the dollar and Swiss franc have an interesting relationship. So because of that, I'm gonna wait. I'm gonna wait to see. This is what H4 looks like. I can't pronounce your name, but hello. Someone wrote there, hello everybody, but he's got an interesting long name and I don't want to butcher it. Hope you're doing well. This is what the H4 chart looks like, right? So if you can see now, inside this demand is the one that we saw when we did our momentum candlesticks, right? It's this demand here, this supply, sorry, not demand, supply. I'm going to mark it yellow, okay? That is marked yellow. There you go. And then I'm going to go back to normal candlesticks. And that's what we have here on the daily time frame, right? So at some point there was this doji here, massive rejection, rally based drop, right? Make it tighter, it would look almost something like that. I'd have to keep that there just because of how long that wick is, and then we'll have to decide if this is a great imbalance. Technically it's not, but this last candle closes outside the supply, so this could be 1, 2, 3. Who knows? I just don't like the sell setup, but it's there. On the H4 time frame, when I'm just making things a little bit clearer for myself, this is what we have. So we've got this supply all the way up there, which is clearly fresh. This supply that is clearly fresh is inside a daily supply, which is inside a weekly supply. So, if there are any people who want to go bearish, that is a good place to try your luck. Historically, price has been rallying down every time it made a supply. Like for example here, it quickly made contact because of those momentum sell positions that were building up, and now finally price has returned back to this area, where historically it was, which has made contact there, right? And then price has dropped going. Now I think personally that since prices tapped here, beautiful imbalance, retest, bearish engulfing, and prices then continue to come back here, right, for a retest. But as it did that, look what's going on. You see the momentum, right? This is why I'm saying I'm not yet ready to buy. You guys can see every week. That's the whole point of us having this data, or the why I'm putting this stuff together. I want you to understand stuff. Every week they keep adding sell positions. They keep maintaining dominance. So because of that, over time, you can start to see from a technical perspective. Look at this from a technical perspective. There you go. There is a massive supply. There's another supply. Price keeps adding another supply. If you guys can give me just 2 seconds, my mother keeps phoning me. Sorry, guys. Make contact after. And she's very relentless. She hardly ever takes no. Right. So I've sent her a message. Hopefully she will read it soon enough. Right. So this is it. So we've got markets, moving, in this invariable way here, and I don't think it's safe to act unless if you're selling. Honestly speaking, from the H4 demands, price made a move there. That's already tapped. You and I are not in that, right? And if you really look at how ugly it gets even lower, you're really looking for confluence now somewhere down here, right? So somewhere down here might be a fresh touch. Let's find it. Tap, price came back and rallied in. 365 candle, not a much of a good imbalance. Complicated 365 candles were tapped. I don't know. It's too late, for now, and that's okay, because I would very much prefer NZD Swiss franc removes these supplies. All right. So for short-term trades, short-term swing trades, you might make money here. All right, you might make money on the final sell of this supply. If price can weaken this supply one more time and price eventually gets up there, you might make money. But until then, I just don't see me, voluntarily risking any capital on this particular area of value. All the demands that you could have taken have been tapped. So this happened on Friday. Will price rally up? We shall see. It's very close to a supply. Aladdin, all right, brilliant, man, brilliant, Aladdin. And where are you from? That's a cool name. I want to say Kenya, but I could be wrong. Right. So this is my humble opinion. Remember, every trade that you take, you want a minimum of 1:3. If you don't get a 1:3 risk to reward ratio, that risk by nature is not worth taking. Right. So if you're to take a buy here when markets open tomorrow, Monday, right, where are you going? Where are you going? Because this supply has to be taken out first. And if it's not taken out, you're literally risking 1:1, or you're using your own money as smart money. You could go all the way down to 1 hour. All right, that's a possibility. But when I come to the 1 hour, I'm seeing an arrow. I'm seeing strong sell momentum. This to me looks like price acknowledging a demand, but simply creating a PCP, right? Price trying to go up, complete rejection, back to the downside. All right, so price could further come and make contact all the way down here, right? But even then, how far could price rally from there? If you're a cowboy, then maybe you want to ride this wave back up for an intraday trader. I won't be in that trade with you. I will not be taking that buy trade with you. This chart does not interest me in the very least, unless if we're talking about, a potential sell up there. I don't like the sell because our governor is now buying. All right, but I'm simply saying it's almost the only logical trade to take for now, right? What we need to do is just to wait. Let's see them slow down and cool off some sell positions by the end of February and start to increase their longs, start to really honor their commitment to buying like they should be. Then we can start to talk about taking long swing trades on NZD Swiss franc. Right, hope that was good. I hope my pace is fine. Let me know if I'm going too fast. I just don't want to rob you guys. I felt like I gave you guys good information yesterday, but my goodness gracious, I felt guilty because of time. Gold, ladies and gentlemen, can anyone quickly on the live chat tell me why this sell did not work? This was a perfect sell. Does anyone quickly on the live chat want to tell me why this sell did not work? Hey, Mr. Lincoln, how you doing, man? And maybe there's a 10-second delay, and maybe it'll take you time to type. So I'll just tell you quickly. This is a safe haven asset. All right, it's a non-starter. As soon as there's problems in the world, by the slightest sense, everybody remembers gold. Okay, it's just as simple as that, right? It's just gold has zero to no purpose. It can literally be kept at a 50% buy, 50% sell. But the moment there's problems in the world, gold will generally pump up. Now let's look at gold. Let's look at it from a technical perspective first, from the chart's perspective. I'm gonna have to pull up another chart. There we go. Axel. We know that gold higher sell. Okay, cool. Yeah. So there's definitely a higher supply, but really I'll go with more Russia, things going bad in the world. So as soon as there's something bad in the world, people will always dump money in gold, right? Because gold is just our global reserve safe haven, right? We are not even in America, so we can't necessarily use the dollar as a safe haven for those of us in Africa when things go bad, but we can all of us across the world, doesn't matter which country you're in, definitely run and dump money in gold. Now, we know that gold is going through the most right now. Gold is currently, for me, in a range, right? This is in a weekly range. I spoke about this in my newsletter that I put out for you guys, right? It's in a weekly range, and I hate ranges. Range in markets are not my thing. Whether you look at it from this perspective, right? Everything in this rectangle, or you look at it from these previous highs into price rejection here, and then this happening. This is literally a classic support and resistance, type of chart. This range is annoying. I make the most money when markets are pumping up like this or coming down like that, right? When markets are thinking and taking time to think, it just gets a lot of spikes, a lot of stop outs, and all. Dubai, all right, that's cool. We actually have one student in Dubai, an actual registered student. She was with us for quite a while, and then she took off, doing quite well for herself out there. Well, thanks for joining us, man. Right, so gold moved. Right, so let's get these facts out now. Gold, literally, let's remove the Fibonacci. I'll come back to all that stuff. Gold, remember, made contact with the governing demand, right? So we've spoken about this. So we know that smart money had every right and every intention, to start pumping gold to the upside. We understand this because demands mean buy, supplies mean sell. This is as early as March 2021, where our demand was touched but barely bruised. And then again, on the 2nd of August, January, February, March, April, May, June, July, August, September, right? So from September is when I started compiling this data for you. So I don't have August, but you can see from as early as September the 7th all the way to today, they've had one mindset, one bias towards gold, which is to maintain a very distinct long position. Because of that, all institutions, hedge funds that actually own the coins, the companies that mine gold, have been hedging their positions and putting more sell-side pressure to keep control of the price of gold. So we've got a sentiment indicator that is slightly negative, but banks, the people we're trading like, have been pushing for gold. And we know that anything between 70 to 79 is a strong a bias, and 80 to 100 is very, very long. So if you got into gold a long time ago, then all you have to do is hold. The difference now, and my only problem with gold is because gold has been ranging for such a long time. Normally, when markets range for a very long time, they are burning positions, right? So it could you could get an explosive push to the upside or to the downside. They're literally accumulating positions as institutions while burning retail traders, right? Because they want to move without retail traders. If we were to draw this in the most classical old school supply and demand way, this is a supply. This supply is oversubscribed. This supply is in pain. This supply has been tapped many times. We don't believe in the whole idea of because it's a resistance, the more times price touches it, it must drop. This is fundamentally a problem. We're talking about glass effect here. This January-February pattern on the monthly time frame reeks and looks like a bullish engulfing pattern. Now, we can't make that decision now up until the end of the month of February when this candlestick closes. If this candlestick closes above like this and maintains an equal low or an open lower, then we've got a bullish engulfing pattern, which is a new demand. It'll be the first time gold since this demand here. You see how gold created a bullish engulfing pattern there, and then price came back and it's been going up a bit. It'll be the first time in a long time that gold actually created that particular type of movement to the upside. A new demand on a governing time frame is gold's commitment to go higher. Now, I think I put this out there at some point on the Telegram group. I could be wrong, but I think I did, that gold wants 2.5, 2.4, as an overall target, right? And we thought we were going to get this during COVID. We thought when COVID was going crazy, that was the year gold was going to go crazy. When gold touched 2000, and then since then, it's been cooling off. If you look at the COT, it suggests, more institutional buying. When things go wrong in the world, smart money will dump most of its money into safe havens. Your safe havens are, once again, DXY, the dollar, right? Because no country can operate without it. It's a global currency. JPY, why? Because we can borrow money to fix our economies at 0%, 0% interest rate, minus negative interest rate. That's the strength of the Japanese economy, is as the global lender. Swiss franc, which is an interesting one. It's a very tricky one because Swiss franc has an inverse relationship with DXY. This can only be strong when this is weak. So I never really consider it that seriously, but it is considered somewhat of a safe haven. And the last one is gold. And sometimes, depending on the crisis, so if the crisis is QE, for example, printing a lot of money, which we saw during COVID, then crypto is also a beautiful safe haven because crypto becomes an inflation hedge, right? So people want to put their money there. But if the crisis currently in the market is linked to the devastation of crypto, then obviously crypto won't apply, and it just depends on the season. Now, given the sentiment in the market and all the crazy things going on, and I literally mean all the crazy things going on, I'm not entirely surprised that gold is now pushing higher. And that's why our sell didn't work. Right now, if we look at this thing from a weekly perspective, we can see that most supplies do get tagged and push price down, and then price eventually comes back, and then supplies get tagged and price comes back down. And now we're going through a situation where on the weekly time frame, the most recent supply was not respected. Here. On the weekly. So this is last week. You see this last green candle? It's the week where all these announcements happened. War, emergency Fed meeting, possible, risk, what, all that stuff. This is this last candle. Before that, had this not had happened, and I'm pretty sure when we looked at the war room, when we were looking at gold last time, we were looking at a situation like this, where we saw, interesting, another bearish engulfing candle like this one, another bearish engulfing candle where price goes down like this one, another bearish candle where price makes contact and goes down, right? So we're looking towards selling here. On the daily time frame, we had the most perfect setup. Let me just quickly rehash all the candlesticks out. Right, so on the daily time frame, we had a situation that looked like this. Gold. Now, because there was CPI, and I hate bringing this stuff many times, but it's just important to understand how these things operate. Right, CPI would have made the dollar strong. Because the dollar was strong, there would be no need for gold. And if there's no need for gold, and gold is by supply, gold would have fallen. But unfortunately, this was just another classic bear trap, right? So price fell just for a day, only to settle in, and enough buying came in and removed this supply. All right, so that's why this area of value didn't work. And Lincoln is right. We could see this higher supply now take over, right? I wouldn't be surprised. But when it does, if you're going to sell, remember, we have a bullish engulfing pattern. So the selling isn't a long-term swing trade sell. The selling is simply a retest of this area, in my humble opinion, and a flight up. And that's really going to be based on, the sentiment this week, right? You'll see here, you could get another break there, right? Because of this supply, or price could simply just even ignore the retest rule because there's a supply close by, break this supply, and then just treat this now as a bouncing place, right? When supply tends to demand, right? So that's kind of like how I feel about gold. And honestly, we're inside a governing supply right now, by the way, just so everyone is clear. That's why we were starting to slowly get ready to sell last week. We have arrived back inside a governing supply, okay? So for me, I was happy to start looking for sell positions, but my mind is obviously completely changed now, right? If markets are absolutely serious about the threat to war and all the uncertainty, then this is going to have to take place. Now, the crude old way, not old, but textbook style of a supply and demand with a massive long body wick like that. Remember, reasonable body, top to body. This is how you would draw it. And you can see that price respected this supply. So if they're doing this now, and we look at these particular events, then there's a lot of room more to the upside, right? And you can see institutions' perspective seems to be of this, that there's a lot of room to the upside. So they are building momentum. They dropped a little bit on the 1st, but on the 8th of February, they went back to, above 75%, 77, 75, 76, 77, 77, 76, 75, etc. So they went back to having more longs, very, very strong longs to the upside. And you can see these were very much tradable because price went up. What could happen, ladies and gentlemen, if they, again, guys, I don't know. I'm not a war person. I've never traded in a war as well, by the way. So there's going to be an incredible learning curve for me. And that's the most exciting thing for me, is I finally get to learn a new cycle in the market. So I'm going to be wrong a lot of the times moving forward up until I figure it out, right? But it seems to me it'll be actually smart to find some buys. If they push this into that 80% region, it seems to me that it would be very smart to take on gold. But my instincts are telling me that if gold becomes smart money's, safe haven once again in a very long time, we might get interesting reaction to DXY. And here, I want to be very clear, I still don't know yet how to play it, because I'm very bullish on DXY. We need the dollar to keep going up. We've been right about the dollar since last year, June, and we've maintained that. But if money starts to leave dollar and come here, because money is going to definitely stay in treasury bonds, right? I showed you guys the 10-year yield chart yesterday, in yesterday's war room. So that's a definite commitment, because those bonds are long-term. So people are already locked into those bonds. So money is staying there. But I'm wondering, how certain we are about, well, there's nothing. To me, I don't see why price wouldn't continue going to the upside. FOMC has been very clear and kept and protected the uptrend on the DXY. This is a daily supply that price made contact with over here. And I'd like to see that daily supply being taken out in the next 5 to 6 days, in this week into the following week. I think that's very possible, but it's going to depend fundamentally on this new thing in the markets, right? So for gold, I'm not so sure if anyone in the academy took the sell. I personally didn't, only because I was run down, right? I was literally run down with my Monday schedule. Had I taken it, I promise you, I would have taken a loss too, because my stop loss would have been just slightly above there. Even if it's trying to tag a higher supply, this was really a perfect sell setup. In a normal technical analysis perspective, we've got a nice clean downtrend. This triangle is getting very much choked up, and finally a supply and a break of structure, simple retest. This was supposed to be a winner, right? So I don't know what this means for dollar and gold, but during the week, we're just going to have to see how the market feels. Okay, that's gold. AUDCAD, number, I don't know, 3 or 4. All right, we can already see what happened. I'll do a top-down analysis here and mark this up, but our plan was to always sell up here. Price literally, so this is I think this is such a good example of why sell high, buy low. It is such a perfect example. You see, there's absolutely nothing. And you remember, if you look at AUDCAD, let's see if on the spreadsheet, because some people might think I'm just making stuff up as I talk. And it's absolutely important you remember the context. We see these things 3-4 weeks before. See there, AUDCAD on our pending order list, right? AUDCAD 48, war room number 48, and I put, did I not write the date? I normally write the date. Oh, there's the date, 24th January. So we spotted possible sells on AUDCAD on the 24th of January 2022, right? That's literally what I want you guys to understand. Supply and demand, set and forget, is amazing. If you look at 24th January, this is all I had. This is the information I had on the charts when I gave you guys the signal, right? That's what the chart looked like on the 24th of January. And so tomorrow is going to be Monday, and I'm going to be looking at charts again. And I always come across such scenarios. I'm looking, this is my analysis. I'm like, okay, damn. Probably monthly selling. We know for sure that AUD is weak. We've looked at AUD many times. I mean, we're already in a very good AUD trade. You can see 85% on the sell side. AUD pairs in general are leaning towards falling. I'm happy with all of that. And I come here on the 24th of January and I'm starting to wonder, what should I do? Number one, the consumption of making money immediately, the greed, the lust, the emotional imbalance in all traders' minds. New traders, and a new trader is a trader who's been trading for 1 to 3 years. You are a baby trader. Be patient. You are still new. You have not gone through all the market cycles. It takes about 5 years for markets to go through all these cycles, including a crisis like the one we're in right now. All right. So be patient. Medium traders, 1 to 5 years. Then senior traders after 10 years. I am only becoming, in the professional sense, a senior trader next year. I'm only in year 9 of my trading journey. And I now know enough to say that the moment the trade looks too simple, too easy, it is my push. That's why everyone should be part of the bloody podcast, guys. Please, there's a lot of amazing things in the Money Heist podcast. Check that stuff out. It's on YouTube, it's on Spotify. Because the stuff they're talking about in there, although not always connected to trading, is generally how you deal with money. I mean, Ken Honda's book right now is talking about emotional relationship with money. Well, on the 24th of January, this is like, yes, I'll make money. And the problem is, the part of your brain that thinks like that is similar to our flight or flee structure. When you see a dog in the middle of the road and that dog is just big and not on a leash, you don't know the dog. You don't know if the dog is friendly or not friendly, but everything in your body wants to run. So you start to run. Even though you're an adult and you know for a fact that dogs have 4 legs and that they can outrun you and that they can catch you and that running makes you look 10 times more suspicious. Flight or flee will force you to do some dumb stuff like that and run, and you end up getting chowed. Flight or flee in trading is this concept of, I don't want to lose money, which is fine. That's very defensive and protective. The problem with that is you don't want to lose money, but you want to take money from the markets. A supply presented to you beautifully like this, very close to where you are, means you don't have to wait till next week. That means you can make money right now. Your trading psychology is out of whack because you are thinking about the obvious trade that every single retail trader is thinking about. If I can just quickly zoom out a bit on the daily time frame, you will notice here, this area on the 1st of December, you see this this downward trend, what we call a potential continuation pattern. If you've done my course, you will see that there was massive rejection there. If we draw a line there and we start to move to retail trader time frames, so if we just draw a line somewhere here where these rejections are, and then I'm just going to put an eclipse around it because I want to find it. Right, perfect. Then I'm going to go to H4. We're going to go there. You are going to notice the trap. This is for retail traders. They give them a support and they break the support and they let the support hold for a bit and they break the support so that the support can become a resistance. That means smart money is well aware that the average supply and demand trader and even the most experienced retail trader, their zones of looking for money are all here. Smart money is aware of that everybody is trying to see whether this bounce will hold up or down. And if it doesn't hold price down, it's interesting. But if it's going to be a support, and then somewhere along the line up here become a resistance, every single retail trader and not fully furnished supply and demand trader is going to sell somewhere in this big zone. So when you do my module 4 trading psychology course, you're going to hear me talk about conviction. If you read The Adventures of a Currency Trader by Rob Booker, right? Smart money loves pushing you on conviction. If you've read Mark Douglas's book, Disciplined Trader and Trading to the Zone, conviction is the only thing in the world that moves the markets. If I am convicted of smart money that I want to sell higher, I'm going to sell higher because I can back it up with money. So once again, it's the 24th of January. I'm looking at this asset. 1825, and this is the data that COT is giving me. Because you're gonna see 86%. You're just gonna start selling because Leroy said it's his conviction. See, so on the 24th, 25th, I had this data. I had first weeks. I mean, the week before that, there were 91% conviction. So I know. So psychologically, I'm on my edge. I want to sell because they're clearly selling, and then on the charts, there's a supply that's been presented to me, easy peasy. But the moment I look and see that this is where retail traders are looking, because we're not retail traders, we don't want to trade like retail traders. We don't want to be caught in the supply and demand issues. I quickly break out of these small time frames, run to my daily, and then reconsider my move and ask myself, what would I do if I was smart money? If I was smart money, I would put a liquidity trap over here, which is to say, yes, we're not going to break the rules of supply and demand. We absolutely are not going to do that. This is a supply, fantastic. But what we are going to do is we're going to put money in a higher supply because that makes so much sense for us because we make a lot of money. Now, if we were to do, I mean, it's not the best area of competition, right? I think this would be a bit too expensive even for me. You can see how I drew it. I would have preferred to have been tagged there. But this is the complicated 365 pattern that we all know very well about. I've drawn it very much correctly in the way we teach it in the course up there, right? So had your supply somewhere there and your area of value, your area of contact, right? Because you'll notice that I don't think we were tagged in this trade. Price came and we missed it by just a couple of pips because I didn't consider the entire complicated pattern. And I don't like doing that. I don't like doing that sometimes. But look at how price rallied into these zones. So first price on the 24th, when I'm analyzing markets, goes a little bit lower. We call this break of structure. So it takes out this demand. Remember, this is important. We've done this in the course. We want you to remove the opposing area. If you can remove this demand, beautiful demand, I am even more convinced in my idea to sell because I know that institutions have removed an institutional level, making a clean path all the way down, right? So my first target, if I am a short-term swing trader, could be somewhere here, right? Otherwise, I'm looking at, a much more longer swing. But my entry is not going to be here. Now, look what they do to retail traders. They confirm. Remember this line that I drew earlier on, right? They confirm support and resistance. But remember, retail traders were taught a terrible thing. God knows by who, but I've read so many books around it. They were taught to only enter the market after confirmation. What does confirmation mean? Confirmation means wait to see big red candles. You need momentum. You need confirmation to be sure that you're selling. So when the first candle makes contact, as a retail trader, I most likely won't sell. Why won't I sell? Because that's not enough confirmation. What if it's a trap? All right. Okay. That's one nice way to look at it. The problem with that is the very next day, after they give them, the first touch, they give them the confirmation. What's the confirmation? It's a classic bearish engulfing pattern. You're like, Jesus, Leroy, now we're talking because really we should sell. But price is reacting off a supply, dropped a little bit low with a bearish engulfing pattern. Now, every Jack and Jill in trading knows patterns like this generally should lead to the downside. So where are retail traders starting to sell, starting to shoot down the market? Here. There's a lot of selling starting to happen here. There's a lot of selling starting to happen somewhere there. And obviously those who are trying to sell there. Where is everyone's stop loss? Somewhere up here. Some people's stop losses are just after the confirmation candle. But what does smart money do the very next day after that, right? Samuel in the group once posted a funny picture that says, repeat after me, I am liquidity, right? And that simply meant, repeat after me, retail traders, I am dumb money, because you are literally using your capital to be devoured. And it was. So this is conviction now. So now they push price a whole lot higher to drop. Look at the drop. They come into this area here, confirming our complicated 365 candles. I don't think I'd have been tapped because of how strict I am with my area of competition. And look at where the selling even begins. So Price is very bullish there. They collect all the liquidity, taking out every single person's stop loss. Retail trader stop losses are here. The novice supply and demand trader stop loss is outside this supply, because the novice supply and demand trader is being smart. It's like, yeah, okay, but I can see there's a real supply there. Taken out there because they ignored a big rule: sell high. I spent a lot of time on this chart. I do apologize. War rooms are for signals, not for teaching, but I never get a chance to come back to these things during the week. So I hope this is helping. Please watch out for this. It happens all the time. So when I see these charts, and you see sometimes I get it wrong. I mean, was it AUD, NZD last week or the other week, the trade that we lost, right? There was a higher supply that I just failed. I fell for the same trap, just on a different chart, basically. Okay, and a nice way. I just want to see if it had been clean. Yeah, I don't think I'd have kind of like guessed that this was the area of competition. My area of competition would have remained this tight, and I would have been very much fine with it. I personally would have been fine with being left behind here, right? And who knows, they might actually come back for us. So let's keep those pending orders in place for another week or so. But this is on right now, because this is on, number one, and the supply has finally been taken out. Retail traders have been finally removed. We could now start to consider jumping in on the trade. So I'm just going to go to H4 and see what it looks like. Picks up by bullish engulfing, slow and steady, weak downward trend, right? I'm not excited about this on the H4 time frame. I'm just going to really go to 1 hour and have a look. This is exciting. So look at that, right? So right there by that area of competition, is this not? This is probably by that retail trader level. No, it's actually by okay. So right there by my. Sorry, I'm just trying to figure out my lines, right? So right there by the complicated 365 lines, right, where the entire order block rests. I hope I'm clear, right? You can see that on the 1 hour time frame is the head of the supply. Look at that. She's pretty. She pretty. Right now, I don't know what it's gonna take for AUDCAD to come back here. But look at how tiny this area of value is. That's another thing you want to start getting very good at, right? You want to start risking little pips for very long gains, right? So this is just under 12 pips, right? So it's okay, man. You can make this area 15 pips, put your stop loss a little bit outside there, and then try your luck. Maybe price will come back for you, right? I don't see why it would right now, right? I mean, if the dollar starts to fall because gold is going up, then AUD could get strong for the week and come and tag you there. But you know that price has started its downward journey when it starts to honor retracements. Got, swing high, swing low, drawn a beautiful Fibonacci. You got a bearish engulfing pattern at that 50% just before the golden ratio. Retail traders made money here, and whoever made money here, price has gone down. Price has come back into an hourly demand. And now the question is, and if you want to sell there, you have to believe that someone is willing to break this supply to come make contact there again and then come back down with you. And if that happens, that'll be cool. I'm happy to put a pending order there, up there, because in general, we want to sell. And this will be a nice high sell to take. I am also aware that price could not go beyond this point. So price could come back here for a retest and then drop again without me. And that by the time I come back now looking for an entry, markets could have done something like this. And then I'm really screwed now, because price will never come back for me, at least in this month, or in this financial quarter, whatever, however long it takes. But I'm not willing to risk money here. I like the idea of waiting up there. So AUDCAD, I'm just going to write next to me H1. I don't always have the best of luck with H1 entries. I actually hate them. I prefer daily supplies. But the supply that we've just chosen right now on the H1 time frame is all the way in here, just so we're all clear. I would need price, whether it's coming to retest this bearish engulfing pattern, to wick into this here on the daily time frame. This area here, this rectangle, is the one I showed you where markets will be coming back for a retest, if I'm clear, right? So fresh touch all the way at the top there, retest here. Cowboys, you might actually get lucky and you can make your money here. All right, so like an 11 to 12%, it could work. It honestly could work. I mean, price could be on your side here. Just get a good retest, have a healthy stop loss just for price to breathe. You're still risking minute pips and then hold for a very long time. I won't be with you here, or maybe you'll see in my spreadsheet tomorrow. So what I'm going to do is I'm going to amend the AUDCAD or add. I'm just going to add another pending order for AUDCAD, and you'll see the new ones I'll highlight so that we're all clear on what has been added and what's not been added. Right. But for me, I'm very much interested in a fresh area of value, right? A fresh touch. This will be golden. Let's see what it looks like on the left. So price on the left also has a history of selling where we want to sell, right? So exactly like it looks like on the daily at the top on the 1 hour time frame, 2 green candles, then a massive imbalance drop. I still want to sell there. I still want to sell there only because bearish engulfing patterns do allow for 2 touches. I still want to sell them. So I want to see how deep the penetration was here. Very deep. So markets removed the supply that I just showed you on the left. You can see markets broke it. And now the question is this big enough a commitment for price to hold? Right, so only time will tell. But yeah, I think I'm going to wait up there. And if I change my mind, you'll see on the spreadsheet tomorrow if I'll put a little risk here as well, because this could hold. And this was done on the 10th of February, right? So 10th of February, there was some action, and that's just off the back of the 8th of February COT where they added more sell positions, right, compared to the previous week by almost 1%, etc. Right? So AUDCAD 1 hour. The next chart we're looking at, NZD Jpy. I'm so glad we're going through charts today and it's not just theory, so that you guys can get something out of it. Right, let's start off on the governing time frame just to see what's going on. I'm going to have to use a different chart so I don't cheat and look at my previous notes. Right, so we have this situation here. And I think I was teaching about this yesterday when looking at NASDAQ, right? I say to you guys, you know, sometimes when you have price on the other side of a valid trend line, right, the supplies in there or the demands in there can temporarily hold price, but at some point in time something has got to give and price will honor the direction it's going in, right? So you can get supplies here trying to push price down, but at some point price will get to a place where demands take over and start to counter all these supplies up until markets get here. So in my long-term perspective, very long-term perspective on this chart, I believe that NZD wants to make it all the way back up there. All right, that's it. And I think the best trade for price to get up there is if price comes back down for this demand. That's my humble opinion. I believe that price should first do that and then do that. And if price does that, this is one of those buys that I make and I never close. This is literally my swing to position buy. NZDJPY. It's just that, been very patient and been waiting. You look at the bullish engulfing pattern, it's fresh touch, it's just perfect. It's a textbook trade. It's the same demand that broke structure. So we know that when an area of value, when a demand takes out a bearish structure or a supply, we call that a very strong demand, right? NZD, I think we looked at it. I just don't remember what it was, right? So we're waiting for momentum to build on the short side, which makes sense because I want price to first come back down before I can start buying it up. JPY, our safe haven, right? Naturally, it's going to be weak. The currency is weak because the safe haven, or rather, there's zero interest rates increasing. And if you don't increase the interest rates in your country, your currency stays weak. JPY's currency must stay weak strategically to keep loaning out a whole lot of money. For example, the dollar, we are assuming that there might be an interest rate hike tomorrow. And if there is, I can look at pound USD. I can look at pound. Yeah, I am. It's actually part of my list for today. Yeah, so we want interest rates to go up for the pound, for the dollar, and that will strengthen the currency, right? So low interest rates or negative interest for the JPY keep the currency nice and weak. And so in trading, they keep trying to dump JPY. So We need NZD to get a little bit strong and JPY to stay exactly the way it is for anything to work here. Right, but from a structural perspective, you'll notice that we also now have, for the first time in a long time, because the first time it happened, price was reacting to this. Like I said, anything on this side of the trend line eventually gets dealt with. And then that area of value was removed. Price then started to slowly drop and there was no supply there. And really, our main focus right now should be if this November, January, February type of situation is going to work. So this is December, January, sorry, this is December. December, January, February, right? This bearish engulfing pattern already, the candlestick of February has already done a beautiful retest into that zone and rejections have slowly started to build up. What on earth is that? All right, so this is the monthly. When I go to the weekly, there's a higher supply on the weekly. Fresh touch. That's interesting and annoying. All right, and if this was a peak supply or any type of supply, we would really say it's been exhausted, right? Price really went deep, took most, if not all, the sell orders there, which means that we need to be mindful of the fact that on the weekly time frame, price might not have a plan to stop there ever again, right? That price will definitely want to go through this area of value. There's generally never another reason if price deeply enters an order block like this, penetrates over 50%, right? It means price now is done with this area and wants to go up. So valid supply. So you can see, the last week of January, first week of February, markets made contact. Markets have been dropping ever since. We see an attempt to fill market inefficiencies with the body of this candle, but there's still a long way to go, with this particular wick here. So time will tell. What I want to do, I'm going to wait here. I want to sell all the way up there. That's trade one. I could find another second trade idea, but for now, I definitely want to find confluence to sell all the way there. Now, this is probably like a knee-jerk reaction to some news, right? So price came in very heavy, somewhere there, and price fell, breaking that supply, this one here, and price fell. And then slowly but surely, markets have been making their way back to where it all started. This area here, I'll remind you, is this weekly supply, all right, where market stopped on the daily, right, and then started to create a bearish engulfing pattern. Now, this would be nice. This is absolutely encouraging. The fact that on Friday, this is how markets chose to close, right? This is an interesting signal of commitment to the downside. I don't trust it yet, but it's quite interesting nonetheless. Not much here on the volume-based candlesticks, except for the fact that markets have tapped this whole entire area out. Right, so the next big push to the upside on this chart could be pushing first to simply remove the supply. And we need to be very, very mindful of that. This is NZD Jpy. So I'll quickly check out the index, right? But right now on the daily, we could expect to see Monday, Tuesday, a retest, and then price continue to fall. Now, price has been breaking, lower lows, etc. So that would be the next thing we want to look out for, right? Low these lower lows. This was a nice low in the charts, then markets at a higher low. Then all of a sudden, the structure got invalidated here and here, right? So markets seemingly are pushing to the downside. Just for kicks, can we just quickly check out the index, ZXY, New Zealand dollar index, currency index strength, just for kicks and giggles, right? So this is NZD. Literally, by the way, this is exactly what we saw with Euro USD. Remember, the leader for risk sensitive assets is the euro, breaking structures that were affected by crises, whether it was the 2008 crash or the 2011 crash. This is in 2014, and markets have been falling, and then came COVID 2020, right? The recovery of risky assets, Bitcoin, crypto, euro, pound, etc., with the resurgence of whatever sentiment, right? Markets started to rally, and then markets then stopped somewhere, somehow, right? So there was this supply there that currently slowed things down. Markets made a nice hole, meaning they do want to go up, right? Just like NZD JPY, the target, like I said, is all the way up there. And my belief is NZD as a currency by itself relatively wants to get back up there. But for now, markets did a long-term range, supply, retest, supply, range, finally big bearish engulfing pattern, follow-up bearish engulfing pattern into a demand. This monthly demand heavily under attack. I believe price has done a massive retest, and I think NZD is going to have to fall, a little bit, for the first financial quarter maybe, before it can get back up again. All right, before it can really make some strong headway to the upside, and that fall could be caught somewhere here, right? It needs to take this out. The other argument, and I do agree with the senior trader who proposed this on Thursday, Friday, was that we could look at this as just a potential retracement. This was at that 50% area. And you know what? I somewhat agree, but look, man, at the end of the day, this monthly demand is still inside the golden ratio. So at the end of the day, we still have to wait for price to get there. That's like my personal opinion. Price still needs to get all the way down here. Something like that, right? So I am, for the time being, quite bearish. I won't lie. NZD JPY. Now, let's find a trade. So on the daily time frame, man, we spoke about this. This is all marked up. Oh, it's marked up. It was marked up in my pre-analysis. Just me being busy and not taking trades. This is like my biggest problem this year, it seems. Um, I hired two more people to help me with my corporate accounts. I trust them; they're doing quite well. But I also have a problem with not being able to fully let things go, because I want things to go in a specific way. So I haven't felt their impact. I haven't felt that I know they're there. They're doing a very good job. Don't get me wrong. But I don't feel relieved of my everyday duties at the moment. But yeah, so this was a clean, this gray area is probably like an H4 supply, right? That quickly got tagged and removed, which makes a lot of sense, because somewhere in here is a better supply, especially if you look on the daily time frame, right? That's a nice high. So it's not, unfortunately, no one is in this trade, because obviously I didn't share this idea and I didn't set a pending order as yet. But this is nice. This is like short-term money. All right. I thought price wouldn't hold forever, but if it does hold, that's very nice. If you come to the H4 time frame, you'll see bearish engulfing, rally, retest there, bearish engulfing. Right. So what could happen next is on the H4 time frame, so that means tomorrow and Tuesday, is we might get a rally and then a big drop. That would be interesting, and if that's the case, that would be great. I am more thinking very long term on this chart, and so because of that, I am more interested in selling outside the structure, right? But the structure 1, 2, now 3 is being violently maintained. Price wants to maintain it. Price doesn't want us to have a break of structure, break out of the bearish trend line and go higher. Price caught price there. It was a very clean supply. I should have just, well, there's the whole, risk reward ratio, almost 1:4. Price coming back all the way down. So if you are brave, you can see on the 1 hour time frame, markets were already starting to make their way up. All right, on the 1 hour time frame, markets were already starting to make their way up. On the H4 time frame at the close, this is what it looks like. They took out this demand. And remember, demands are not taken out for fun, right? They took out this demand, and the argument is they made contact with the demand somewhere down here. I don't see that yet, right? I don't see price arriving at this demand based on how I draw my demands. And so because of that, I'm almost convinced that price might be back one day, right? So on the daily time frame, we have something that looks like this. right? There we go. Something that looks like that, and then price, starts to fall. Right, so broken demand somewhere in here. I would watch this 1 hour time frame chart very carefully tomorrow, especially during the London session. I would watch it and maybe hope that the Asian session pushes me between midnight and 9 a.m. tomorrow into a supply zone. And then I would start to ask myself some really very important questions. Like, for example, what's wrong with me? Why do I like taking risks? Because this is quite a risky trade, right? There's a very, very clean potential this could happen. But also, this is a nice place to wait, even on the 1 hour time frame. Just as much confluence as possible. So let's see what this yellow zone is. It's an H4 daily area. Let's go to daily. Whoa. So it's in here. So the area that I'm talking about is somewhere in here. I don't know if that's going to happen, but it would be nice if price was to retest and then, have a long wick into this zone, as it usually does, right? So somewhere in here is a beautiful zone. And that's that 1 hour supply that I'm referring to, right? This 1 hour supply there. That would be nice. But if it doesn't happen, which I don't think it will happen, right? Let's just draw a Fibonacci. Then here, this is good. So I'm going to have another pin in order here, just for the sake of it. That's NZD Jpy, and also that's also another 1 hour trade. This is high risk, guys, because there's 000 confirmation with this trade. I don't even understand it myself. Let's see. H4. Okay, no, it's a supply inside an H4 supply inside a daily supply. No, it's fine. Yeah, so I'll definitely take a risk here on NZDJPY, but don't wait for my spreadsheet because it's going to happen tomorrow, right? So you really want to be on top of this and double check that you're happy with the risk, but it seems to be worth the risk. Put my stop loss somewhere out there. It seems to be worth the risk. NZDJPY. The same thing could happen as we saw before in the past, though. I could be right. Markets could come all the way in, use a wick to trigger a higher supply, and then form a body, which would mean that this would have been a waste of money. If markets are going to form a long wick like that, markets are going to liquidate you somewhere here because your stop loss has to be outside there. So that's something to be very mindful of. Right. NZD JPY done. I'm just going through my list, guys. Our war rooms are normally 2 hours, so I am checking the time. We've done gold, have we not? Right. So I saw a potential trade on silver, but that might have gone to the dogs as well, given that if gold moves up, silver is strong as well. Yep, silver was very strong on Friday. Oh, that's perfect, but it's not where I want to sell anyway. So let's just quickly look at silver holistically from a top-down perspective, right? This is silver. You saw the data on gold, I believe. Gold longs, right? Silver is next, and it's just been, slowing down momentum, bring up momentum, slow down the momentum, but everything is leaning towards long, but they have not been that committed to silver like they were in the past, and that's kind of like telling, right? And that's because gold is their main market, and they've chosen a winner, and they're gonna bet on that for now, right? But there is a bit more longs, for institutions to push silver up, and we can see that on Friday, just as gold was breaking that supply, silver was also creating its own bullish engulfing pattern on the daily time frame, right? So there was definitely like a big positive sentiment for metals, right? So I'm pretty sure we'll see the same thing in palladium if we have a chance to have a look at it, right? But let's do a top-down analysis of silver. So silver had a strong push. Can anyone guess when? Exactly March 2020, right? When every other risky asset was recovering during the COVID crisis, silver did very well. And then like gold, silver created a supply and then stopped climbing up, right? But unlike gold, silver never got to do an all-time high. right? Gold at least got to do an all-time high. So silver's all-time high is supposedly around the corner, right? We need to pass there. It's supposedly around somewhere. Now, if you look at silver, a whole lot of noise on the governing time frame. Just gonna quickly draw some interesting zones on silver. Supply 1, supply 2. Something like that. Right, so you got this all-time high doesn't give us a supply, and then this finally gives us a supply here. This is like your major turning point, but remember, it's not a supply unless it meets our rules in the course, in the module of what a supply is, areas of value, etc., etc. So you got a nice strong supply there, and then price reacted to it, and then price did some Talitha stuff, bearish engulfing stuff, created another supply. And one would argue that, look at this, 1, 2, right? So there are two of them, right? So you've got a situation that looks like this, right? Look at that, double. Right? And one would argue that, that's where price is stolen right now, right? So markets have made it here. Now, ideally, if you're in a country that allows you to buy silver, so, in South Africa, you can buy gold coins and silver coins, but you can't keep them, I think. Oh, it's not safe to keep them. I don't know. I just keep them in safety deposit box in those places. And you can also buy gold notes. You can buy in South Africa. You can also buy the Kruger. There's a whole lot of stuff. But anyways, the point is these are nice things to have if you have a very long-term perspective. It's not. I don't see myself ever selling my silver and gold and then going, I'm gonna go buy a car. I see it more as a nice way to pass something on to your kids long term, right? Because then the value of these things 10, 15, 20, 30, 40 years from now is substantively far much more greater for them. But also, depending on your country and regulation, you can actually use it as a securities. So I could also go take a big loan of those assets to trade at high leverage or to buy crypto. Now, this is not financial advice, but I'm going to tell you this right now because I care and I love you, but it is not financial advice. The screen is always off when markets are closed, but these are the currencies. You can see that oil, energy, gold, crypto are currently beaming greenish, right? Because based on everything else that's just bleeding in the markets, right? I'm pretty sure you saw what it looked like for the stock markets earlier on. Stock markets it's a dead game. Am I not logged in? Oh man, I thought I'd logged in. I was logged in earlier on. Was I not logged in? I believe I was. Sorry about that. Just want to quickly show you something. Show you something. There we go. Right. So, there's a lot of blood here. There's a lot of blood. Now, this is not financial advice, and I'd never tell you this. I'd never tell you to go do this. I'm not going to be with you when you're making these tough decisions and things blow up in your face. I'm not going to be there to pick up the pieces for you. As an academy policy that I'm bound to, I don't borrow students' money because it messes up our relationship. I tried it once, it just didn't work. And now I can't teach you, or you don't want to come to class because you're ducking me. It's just corrupt. So it's not financial advice. But I've talked about this before many times. A lot of people in South Africa love home loans. They love them, right? Because they want to own a house. And owning a house is a sense of social accomplishment based on your relationship with money, which is fine. A lot of people in South Africa love car loans or car payments, right? And I don't know why, but goodness gracious. These two things are a massive cancer to your financial well-being, my opinion, not financial advice. Home loans require you to pay up to about 20 years, depending on what you qualify for, blah, blah, blah. This is going to be a 4-week painful thing every month. Now, I don't know who you are and your financial situation, and I am not giving you financial advice. And those of you who hate my content by now probably have already gone because this video is getting too long. But if you were to be interested in a personal loan and check if you qualified for one, and I'm not saying that you should, this is not financial advice. This is a scenario. This is what institutions do every day. This is why you'll find a massive trading company in your country that's got good reputation, Old Mutual, Salem, Allen Gray, whatever it is, will have a good contact in a country like Switzerland, or more specifically Japan, right? And they will get a loan, and then they'll take the exact same loan and go put it into the financial markets if they have the skill that guarantees they will pay it back. Why? Because a loan from JPY that comes at 0%. Imagine this. Imagine you run a company, a trading company, right? And we've got 6 trading companies from students within the academy. And I'm not going to tell you who did this and who it's working for. It's none of my business, because I don't want you to get too inspired and you go take random risks. But let's first say company X, right, borrowed 50 million rands, and someone is going to have to figure out how much, and they had to put up a lot of collateral for this. And this loan was the most biggest risk I've ever seen in my entire life. People's lands were touched, all the cars, everything was put up as collateral. But because of favorable gains, good credit, etc., there was a very low interest rate, a monthly installment and an interest rate payment on that. And by the way, the main project was going to be around massive reinvestments into buildings, land, and a whole lot of trading stuff, right? That's what they told the bank anyways. Okay, now you take this loan as a company, then you go dump it into the crypto market during a bull market, right? Your 50 million, by some miracle, as we understand cycles of markets, all of a sudden becomes 125 million in just 1 year of holding, right? And you're looking at low cap coins, you're looking at your altcoins, you're looking at, I know they've literally put 1 million in Shiba, and then Shiba exploded like crazy, and that 1 million alone turned into like 15 million, sorry. And then all of a sudden, you quickly take back what you owe to the bank, literally 7 to 8 years way ahead before your payments are due. What does that do? It tells the bank that somehow, somewhere, you are a very good lender. So you can get a very good credit score in a registered trading company, so that if you have the ability to time the markets the way you did then you can do that again in the near future. But that was like easy money to make. Now, as an individual, you're never going to get 50 million rands from the bank. So let's go to this idea of a personal loan. Let's say you have a personal loan, but you've got a job and you're very good at living within your means. And the personal loan is quite substantial. So let's make it Capitec loves giving people 250,000 rands. I don't know why. That's a lot. They're kidding people. Or let's say the loan is 100,000 rands. I'm sorry for people in Dubai and Kenya and all that kind of stuff who are not in South Africa. I'll just give you an equivalent. So let's work with 100,000 rands. Is that a million rands or 100,000? That's 100. So I'm saying a loan of about 6.5 thousand US dollars. So let's say you get 6.5 thousand US dollars as a loan from the bank, which in South Africa would translate to 100,000 rands or 6.5 US dollars. But you've got a job. So there are conditions to this. You've got a job. Number one. Number two, your job pays you enough for you to still take care of your hair and your makeup, and I don't know what men do, right? Well, whatever it is, you pay your rent, so your home is fine. And when you get this loan, you sign a 3 to 4 year agreement to pay it back. Right. If you apply and you qualify, not financial advice. Let's just say I'm telling you a story. I do not want to be held accountable for this. Right. Now you've got this job and you're making decent money, and then you manage to allow the bank to agree to a payment plan of 5,000 rands per month, which is very similar to home loans, because home loans would be 5 to 8,000 rands per month. For my people in Dubai and wherever else you are in the world, real quick, 5,000 rands is 320 US dollars per month going towards this loan of the bank. But you get the 100K up front. You get the 100K up front. If you're a 365 trader, all you have to do is then spend one weekend, come to this tab here, go crypto, right? And then look very carefully at what we believe are winners. You can do a little bit of research, but this is obvious. Ethereum is going to blow up. XRP is going to blow up. Bitcoin will blow up, but Bitcoin's market cap is way too big. So you're not going to get a 10x or a 5x type of movement. You're going to get a 2x, right? Because remember, your loan is supposed to be paid up within the next 3 years. But this whole strategy is hinged upon the fact that you can afford the monthly installments coming out of your pocket from your job or from your hustle. Do you understand what I'm saying? So you are still paying the loan back to the bank through your own pocket while waiting for these massive pumps. Because when these pumps come, guys, they're ridiculous. I was supposed to do a series of, I put $1,000 in this and I made this much money from January 2021 to January 2022. And I haven't even gone through my portfolio to actually calculate how much that is. But a lot of those coins, Sand, Decentraland, the Metaverse coins, anything that is literally hanging on Ethereum network and is now connected to Metaverse will 10x. It's just a guarantee. And so for the first 6 to 7 months of your life, 320 US dollars, 28 or 5,000 rands comes out of your pocket to service this loan to the bank while you do nothing and hold however you have subdivided 100K. It's not rocket science. Within 365 days to a year, you'll be able to pay back this loan immediately, right? Number one. Number two, I guarantee you, although not financial advice, so it cannot be a guarantee, you will make a lot of money, a ridiculous amount of money, right? I don't know what made me go there. It's just an interesting experiment to do if you've got good credit. And again, your credit in the bank goes up again. So the next time, all you have to do is to wait for the next bear cycle, winter, you go borrow again. I'm telling you this because I'm telling you that institutions do this all the time. Banks do this all the time. If I get a JPY loan, which I can't qualify for because my trading company is not big enough globally to get a loan from JPY, but I get it at 0% interest, like Ray Dalio would or other hedge funds would. All these guys have to do is to put half that loan in their country's bank. They don't even have to trade it. They have to put half the capital in the country's bank and create those saving accounts that give back to you 7% interest on top of your capital, which means you're already making enough money to start making monthly payments by your money simply sitting in your country's bank account, right? This game of finance, guys, is really just a smart money game. But neither here nor there. Time is moving while I waffle away. I apologize. But whoever qualifies and wants to take that crazy risk, terrible, bad idea that was not financial advice that I just put out, I wish you all the best. I've seen a couple of local 365 or 2 companies do it here. I've never done it. I just find it quite fascinating that if I was ever stuck, if I ever lost everything in my life ever again, and me and my partner were stuck, we always make sure my partner was in good credit. I would definitely go with a personal loan approach and rebuild my life in 1 year. I absolutely would. But I would do it because I trust my skill to read charts correctly. Right. So this is silver playing on the governing supply. I will not steer away from what we are talking about because I know time is moving. I apologize. But whoever I'm helping, be helped. Right. And then there's obviously that demand that price rallied from in March 2020 of COVID, where price could potentially come back. So now we have a supply, we've got a demand, we've got a game. And we can see that price is doing what it wants to do, right? Taking out these lows. What's going to slow down silver falling is every time gold wants to spike up, gold will pull the metals with it. Copper, palladium, silver, right? All those things will kind of like move in the direction of gold for the time being. So you're going to get that zigzag approach, which is very dangerous and annoying. But for the most part, most of the money is edging towards a downside. You can see there's not real much commitment. Every time they get too hot on the longs, they start to cool off, and then they build momentum, 63, 65, 63, then they start to cool off again, right? They're not yet ready. Sentiment indicator is still negative on silver, right? So it'll be nice to get silver at very cheap. But if gold takes off convincingly, because things are convincingly bad in the world, then we might get another retest of this, right? Bearing in mind that you could have those Fibonacci levels that have removed 23.6 and 38.6 being tagged, all right? Even worse, right? Price is almost very close to that 50% level, right? So that's, we know that a very good amount of retracements happen in this area, right? So if price even touches here, then you could get a very explosive momentum to the upside in line with, you know, a gold recovery. We shall see, right? But silver, personally, you know, for now, big term, I would want to sell, kinda, but I'd also want to be very clear about what's going on in the world for silver. I'd want to sell as a trader, but I'd also want to be very clear on what's going on in the world, because if silver falls, I mean, there's nothing to catch price. It's a beautiful fall. A whole lot of money is made. Now, look at price on a weekly time frame. Supply, respected supply, created another supply, and this other supply that price created, price reacted, created another supply. Right, we've got that down ladder to hell, right? Consistent flow of money coming up and down, 1, 2, 3, and then price coming back, reconnecting with another supply, and inside the bearish engulfing pattern. So we've got 1, 2, 3, 4, 5 massive weekly supplies. And so honestly, the bulls have a lot of work to do. If the bulls want to go up, they really have to like gather the masses and really start increasing their longs, seriously for me to even be convinced to join them. Because right now, this looks like a suicide mission. And when I drop to the daily, we have this situation. So we've got Friday where the war tenses up, and obviously silver creates a bullish engulfing pattern. But I want you to know that never forget that historically, all the money in these supplies, right, existed before the news of the day. So there's still smart money that wants to sell. So if we ignore this supply, which looks like the obvious supply where price is coming, and we try and target a higher supply, right, which will be the one up there, you know, it might be worth taking a stab. It really might be worth taking a shot. These ones, the daily supplies that I drawn earlier on, they have had fresh touches, so we might even have to ignore this and wait up there. Interesting. Let me quickly see on the weekly time frame what's got confluence and what does not have confluence. Right, on the weekly time frame, this was quite equal, so there's not an engulfment. Then one try, and then price comes back, and then there is a retest here. So this is quite a big sell block, to be honest with you, because this would look like this, or you could just ignore the top if you want and just look at this right now. So this is what this looks like from a weekly perspective, and from a daily perspective. 1, 2, 3, but this makes contact with the demand, and then price rallies back in here for a fresh touch, right? Okay, fine. So I wouldn't sell there for sure. And if I was to sell here, I'd go small lot size to swallow everything. So I'd have an entry point there, which I don't think I want to do, and swallow everything. My stop loss will be here, right? But I don't think I want to do that. I want to get a similar touch. So I can see we've got a fresh touch. So I would love to get a retest into the zone in silver. All right. So which would allow the noise for the war to take place and for this thing to really rally strong up until a point where it falls. And this one day could be the demand where we need to take profit from. Right? This bullish engulfing candle could create a situation where we have a profit target. So that's what I would do. I would wait here. And I go back to the weekly again. It's the one I like the most, right? So even on the weekly, we've got this fresh touch, but we haven't had a retest. So I'd wait there. I'd wait there and then break even. So it's one of those trades I would want to break even and kind of like be okay with not making money. So when I break even, I want to see the fall continue. And if the fall doesn't continue and price comes back, I'll be stopped up. But if it does continue, hoping to make a lot of money, right? So that's my approach. If I look at swing high, swing low, and another swing low for a Fibonacci, I'll draw my bearish engulfing pattern right from the top. Right, first, there we go. First one in there, there's that golden area. That's interesting. Don't you just love it when the Fibonacci brings other things to play? So this is could be a neglected area, right? So my stop loss, because of it, would be something like that. So still, same rules. I'd go in with a smaller lot size so I can swallow a bigger area. To be something like that. My stop loss would be something like that. Or even better, I could find a tighter entry on the H4 time frame, seeing as I'm carrying such a wide stop loss. We'll go to H4 real quick. As long as the H4 supply is inside the daily supply, for some time. Oh, that's beautiful. That's it. Found it. I knew it. Pretty please. Right, so this is me. So I'd sell here. And that makes a massive difference, right, in terms of what we were holding and the risk exposure, and also allows price to run into this particular supply in the event it wants to stretch out for that higher daily supply, right? So this is where I'll take a risk to sell myself. And prices, I wonder if price has even arrived there. Price hasn't even arrived there. So that would be a very nice fresh touch, right? So this is what I'm looking at for silver. It's a nice H4 supply somewhere inside this area. We shall see. And to be honest with you, to be very honest with you, if we're very worried, we would clean up the charts and actually reduce. Because this area does try, but it doesn't really, I mean, it makes kind of these rejections maybe. Right, so depends on your accounts and your account size and how much pain you're willing to bear. But if you remember, I don't know what chart it was, when we looked at a bearish engulfing pattern, price kept reacting on the complicated 365 candle, so from the order block. So price kept reacting from the order blocks. And we can see that markets now are starting to do that, right? Markets are constantly developing and changing, right? So this is interesting. So again, on the daily time frame, now changing my mind, I would have an even tighter touch there. So I could have a pending order here, like a very small, tiny pending order, one there with a stop loss there, and then a second sell position somewhere in here, if not here. Right, somewhere in there, if not there, with my stop loss also in the same position. But just to keep limiting the amount of risks I keep putting on the table, right? So this is what my silver trade looks like. 20 past 6. We've got a few minutes left. Let's see. AUDCAD, and let me first quickly do pound USD in case I run out of time towards the end. Pound USD. Right, so what? Pound USD, is that not what I was asked to do? Yes, it is, right? So pound USD. So like I said, pound USD has been sneaky. Earlier on, I think I opened up with this. We didn't get any type of COT data for this week on the pound. I can tell you individually what pound is looking like, and I can tell you, from a currency perspective, that they released, but not against the dollar, right? So mind games, right? Very much in that medium, 45, percent long, 54% short. So more money is leaning to the sell side. But for the most part, sentiment indicator is almost getting ready to drop. It's still got more buy orders, about 778 buy orders compared to the previous week, right? This was pound with massive shorts. We had more shorts on the 1st of February than we have here. See here, they've cooled their selling. Why? Look at the chart. Oh, this is beautiful. They've cooled their selling. Why? Because they want price to go a little bit higher, right? We all agreed, or not all, but all those of us in the private Telegram group, we talked about not selling here. We would much rather sell up there. And so for us to get there, look at them. On the 1st of February, pound had about 64% sell positions. They've slowed that down, right? And they're like, okay, fine, we'll go 54. And they had 35% buying positions. They have increased those to 45. They've literally added buy positions by 10% while reducing sell positions by 10%. And that's what's created this movement where you kind of like sell, then they change their minds, then they buy back, really back into that zone, right? So for me, I have no interest, zero in selling, just like I didn't have one in that week of NFP for February when we spoke about this chart in the private and public Telegram group. I've no interest in selling here. I don't mind waiting for price to come up here on the daily, right? I don't mind taking this trade there, right? And this buyer's fib area has happened and they've broken this demand, right? So that's a very good thing, right? And because markets have done whatever they've done here, they've also allowed for better distribution. So now all I want to see is something like this. That's what I want to see from pound. Let me just make this white. Right, so I want to see this type of movement, this type of leg complete itself, and I want to try and sell somewhere in there. Now, let's just make sure there's confluence in that area. Right, so you'll see for yourselves, weekly supply agrees with me, right? Weekly supply agrees with me. They're like, look, man, we had this particular situation here, not a bearish engulfing pattern. Green candle closed above, and then the imbalance followed after, number one. But number two, more importantly, price also has already reacted to this area for the first time, and then went down for just 2 weeks, which is common for fresh touches, like a short drawdown, and then price is now trying to make its way back, and markets are deciding on whether to use the bearish engulfing pattern, which I hope they don't, so we can get tagged up there. All right, so that's what I am looking towards. I'm looking to buy to sell up there, until further notice, because I do believe that this thing is as weak as euro and all those things that need to fall. And with the strengthening of the dollar, what will happen is we might get screwed over, because if dollar just explodes this week, for example, emergency meeting that's going to happen tomorrow and dollar just explodes, then of course this is going to have to fall, right? It can't, I mean, it's been breaking rank, but it can't break rank forever, right? It might fall, and then we might need to renegotiate the direction of price up to there. Or nothing happens tomorrow in the emergency meeting, they don't even announce what their plan is, and then we see risky assets kind of like quickly making use of that break before a big fall to the downside. So that's pound USD. I'm keeping my previous analysis as is up until I am convinced that something in the markets needs to change. All right, so pound USD is done. Silver is done. I'm just quickly going through my notes. AUDCAD is done. The next things are, because I plan assets, right? We kind of like glanced over these things last week, so it won't take us too long. Euro AUD, we should be waiting for our trade ideas. This chart is annoying, and I'm so glad, that, price didn't really engage us where we want to be engaged, because, cowboy buys up there. So we're still waiting for that. I don't think I'm going to change my mind anytime soon. There was a very short-term supply here on the H4 time frame. I just saw it. I just marked it. I did not take the trade. It just wasn't my cup of tea. Then there was this demand here that I saw and marked. I didn't take the buy. I'm just waiting for price to get to the extremes, right? Remember, an imbalance is how we make our most money. We need price to be completely polarized, extremely polarized from buyers and sellers. If you look at the euro data, all right, it's just like they're just playing, man. We know what we want to see, but right now they are playing it by very ear, right? So why longs? Because markets were building up positions for those higher sells. That's why we are all still not yet on the Euro USD. We're not yet on Euro USD. In fact, I want to correct Euro USD right now, because a part of me believes that markets are going to find an excuse to pump up a bit further. Part of me believes this. That's why I'm saying, gold could be the new golden child for a while, because all these charts, people always ask me, why am I always right about NFP and ADP, and how come I can guess what the news is gonna be well ahead of time? It's not that so much I need to write and create a fundamentals course for you guys. It's because it's more about understanding. You now know supply and demand. You've done my module 1 and module 2. Now you need to keep talking to yourself. You keep telling yourself the story that the charts are telling you. So if euro removes a supply, euro wants to go up. That's story number 1. But if euro wants to go up, it's euro USD. It means dollar must go down. That's story number 2. Story number 3 is we just saw that gold took out a supply. Now, when I put all this together, I have euro seemingly building momentum to the upside, taking out supplies, dollar strong, but anything can happen because God knows what's going to happen this week because of the war, right? So I wouldn't be surprised to see euro make its way down to this H4 demand and then start to slowly make itself up, to the upside there. And I would very much love to wait. So some of you who are in the sell, fantastic, take profits. I guarantee you, as soon as you get close to this H4 demand, make your money, close it, take profits. I don't know if it's a good idea to take the buy up, right? I never trade against my governor. I'm old school like that. I'm slow like that. The first financial quarter for me is just about building pending orders, right? I make the least money in the first financial quarter in general in markets, unless if I start to look at my crypto and whatever. But in general, FX is a nice, slow, steady pace. But I want to change Euro USD because if they're still building their longs, it means they're gunning for a very good sell, a really good sell. And I just want to make sure I'm in it. So the only way to do that, you see on the daily time frame, is this annoying bearish engulfing pattern, right? I really hate it, but it's taken out of supply, so I'm not going to complain. Now, I probably will have one very and it's the trade that's already there in our pending order list. If you're a registered student, you have access to the spreadsheet. If you come to this tab, your pending order list, it's already in there. We've already put it for your account if you want to take the trade, right? So I'll have that there with a very small lot size somewhere in there. But I am, if I can just use a different chart because I don't want to mess up my notes, I am very much interested in having a slightly sizable lot size. And for me to get a slightly sizable lot size on Euro USD, I am very much fixated on selling a little bit higher. So something like this, just a little bit higher. Now, I know it doesn't make sense because this is a PCP and price has done a retouch. So maybe if I do it like this, it'll make sense. So something like that. And the reason why my stop loss is stuck up there is because I don't know how high price is going to push before markets start to turn. I know for a fact that we've got this one here and we're waiting for that, but the stop loss for that one looks like that. But I do suspect that it would be worth the while also moving, unless if you can only afford one sell position because of your account is so small or whatever, then choose the best sell setup for your account, which for me is always the higher, right? So if I do something like this and then I drop to H4, I really believe there's a better sell entry because what's going to happen is most of us are going to be absolutely in the red for 3 to 4 days. And a lot of you don't have the psychology to handle that. I mean, I've been in the red for a week. I did nothing. I don't care. If once I'm triggered and it's got nothing to do with my stop loss, I don't care. And if I get stopped out, I also still don't care. I'm no longer emotionally controlled by the markets, right? So inside this daily area, so I just want to make it very clear why I want to sell a bit higher and why I'm going to be adding this pending. So inside this bearish engulfing candle right here, somewhere inside here, somewhere in here is just the most, the most perfect H4 supply you'll ever see in the world, which I think smart money is going to run for. It's going to shake everyone out of their sell positions and liquidate just to make contact with this beautiful H4 supply. And I just want you to see it and know that for sure, I will be waiting up there. This for me is just too gorgeous. Look at her. It's just pretty. She's perfect. Doji candle. So you got a rally base drop. Like it's a peak supply of the stuff we teach in module 2 of the course. I don't know. You guys have my trader's edge, right? Trader's edge means this is my edge in the market. So this is what I will always prioritize over any other setup. And look at that. Now, if you look at this entry on the H4, and I'm going to make it red. All right. Why I need to have another pin in order here is once you get triggered here on the current one that we have on Euro USD, remember this is the last sell up until we get to the governing demand, which is down here. So that area in the red there, if you sell here where everyone is going to sell somewhere here, right, then you've got, a risk reward ratio of 1:3, which is good. That's all we live for in the academy. But if you have a second pin order here like this on H4, and you could do it two ways. You could have your stop loss outside this daily area, or you could just be like, out of caution, I'm just going to have a stop loss outside this previous supply. What happens is, if you're very good at holding, and you should be, because to be good at holding, this is what you do. You hold and you do nothing, right? As long as you got the direction right. It means I get more money. I get more for my risk, because now I've limited my exposure. I am selling as close as I can to my stop loss, and this is what I'm looking at. So I'll have one running at 1:3, but another trade running as 1:7, and I couldn't think of a better way to compound than that, right? This trend line is just absolutely useless right now, right? So that's why on the H4 chart, I really want to have another sell order there. If it doesn't get tagged, I'll run with the one that's currently in our pending order list, but I'd love to have a sell in there. All right, so I hope that was clear. Right, Euro AUD we looked at, EURCAD we've looked at before, so it won't be a long analysis. Right, I'm still waiting. Now I'm still waiting. Hopeful. Slowly. Remember how we're waiting and price was still here. Look at where price is. It's coming. It's coming. There's something about the euro. They're building longs, but they want to dump. They're building longs, but they want to dump. So who are they going to punish? Retail traders. Just be patient. So we're going to get tagged there on the daily time frame. Not wasting time on that. We've spoken about it many times. The last chart for the night is USDCAD. And that's just because of how these things go. So someone asked me about USDCAD last week. And I told this person, look, man, I've already sold and gotten out and I'm not in right now. And then during this week, USDCAD just did the most, right? So it rallied very much. You see where I am? These H4 peak supplies, price loves them. As long as it's inside a daily, as long as there's confluence, price loves them, right? So from here to here, believe you me, it looks like a few candlesticks, right? But if you've taken this H4 supply, I don't know if anyone did. I did not. I had a very terrible trading week, in the sense that I got a lot of market alerts that I was right on my analysis in the war room, but I just was too busy to set all these pending orders. But if you're taking a sell there, stop loss there, and just came out in the next demand, right? Just came out in the next demand, 1:3, money made. And then price did it again right there, 1:3, money made, right? And now price is doing whatever it's done, right? So personally, I feel like this trade is now played out, right? You should have gotten a 1:6. Those of you who come to the war rooms and take the trades, I'm very happy for you. Bearish engulfing pattern inside a supply. This is really starting to reek off glass effect. So our next hope is that for dollar strength takes place and we rally into that supply, right? And then if we rally into that supply, the question is, will we come down? I don't know. I honestly am very unsure about that, fundamentally, because there is a lot riding on the dollar right now. So we could get a break of this supply and then a retest of a broken supply, tend to a level basin for demand, and then a push to the upside, and never actually get to reconnect with this demand down there, right? That's possible. But because I've said what I've said today about gold, we also could get a scenario where they slow down on pumping the dollar, for now choosing gold as their main asset. And if they do that, hoping this chart falls down here. If they do that, I guarantee you I'll take the buy there, because the crisis and the gold isn't going to change the long-term direction of the dollar. It's going to affect currently right now, right? It's going to affect currently right now. FOMC could increase interest rate, create so much volatility in the markets that you get one long spike, you get a sharp wick, make contact, and then on the same day, markets move to the upside. We've seen that happen many times. So for me, the only smart trade right now is a buy down there. I'm not even committed to selling when price gets up here, right? I'm not committed to selling anything. Look at this, just like the DXY. Look at USDCAD, maintaining those trend lines, maintaining the FOMC 16th of June order blocks, price rally, price making contact here, price making so there's an uptrend here that price wants to respect. I'm gonna respect it, right? I'm just gonna respect it. I am not gonna be busting and hustling. So I'm gonna let the supply be taken out. That would be nice. Take out the supply and then come back for us down here. Guys, for me, this is what I wanted to look at, just going through as many charts as possible in the amount of time we have without not missing family supper, which is meant to be at 6:30. My family was very kind to release me this weekend so that I could really focus on really trying to map out this financial crisis, right? And it is what it is, right? Things are going to be interesting this coming week. Look out for these numbers, look out for the faithful Nasdaq. I spoke about Nasdaq yesterday. There was not much for me to add. I still feel exactly how I feel about Nasdaq. In all my personal accounts, I've been very clear about this as well. I have zero trades running on the Nasdaq. I was fearful when people were being greedy when they were buying here, so I did nothing. In one corporate account, I just have my sell position, which I'm still holding, and I'm very happy with that sell. Right. My corporate accounts are just primarily based for very long positions because I only have to share profits twice a year with those companies. So it just made sense to sell, right? I broke this stuff down. If you missed yesterday's war room, please watch it because you'll start to see how predictable and the coupling between Nasdaq 100, stock market, and Bitcoin, right? 28 November, somewhere here, when I saw that, surely, I made my strike somewhere in this retest of this breaking of the trend line and held price even when it came up, and now price is going down. We do have academy students at 13,800 entry points. We do have a lot of people trying to buy Nasdaq back up at 1400s. And my message to you is be very careful. Be very, 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 very careful. Right. I do not believe it is a good idea to buy this thing right now. I say that, and then tomorrow Biden goes, Russia has changed its mind, and then the stock market is so happy, and Nasdaq explodes by 300 points, and then someone's going to be angry at me and say, Leroy, this thing went up, and you say don't buy. So I'm just giving you caution and education. You do what you want with the money that you work hard for, but I don't see myself buying Nasdaq right now. Because remember, our area of defense last week was 14,500. 14,600. And I said in the public Telegram group, please join our public Telegram group. If you're not in the public Telegram group, the link is in the description. Sorry. I did tell you guys, if you look at the H4 chart, I say to you guys, look, man, this area here, 1600 is our last line of defense, right? I said this past week, literally Thursday, Friday, when I was talking about Nasdaq and quite trying to be active. I was saying, look, man, if we look very carefully at this chart at the time, it seems like the only chance the bulls have, right, to really hold their line is 14,600, 14,500. If that fails, then you have to come back all the way down here. You have to really negotiate with 14,100, 1400, and some of you are going to be stopped out, right? So that's just, part of life, I guess, right? But if you look at this trend line structure from the 2nd of February, and it got a touch and a break, markets are now sitting right there. Markets have come full circle right there, right? And that's how I was starting the week. Now, if I am to draw another rectangle at an already very clustered chart right now, this is what I'm saying. But for me, the bulls should have fought hard. If the bulls really wanted this thing to stay, and by bulls, I'm talking about institutions, they really wanted this thing to really stay, they should have, maintained it up here. Price has not yet come back to the other side of the trend line. So that could be a good sign. It's also a nice place for markets to open on Monday, right? Open very bullish. But you could get during the London session and Asian session, and even in the New York session, an interesting final push, right? You could get this. It won't even make it to 14,600. Could get this to 14,500, where the bulls failed, right? Because that's where, time. Now, look at this. Let me just show you what I mean. Look at this. We've got a demand here on Nasdaq. It was broken. 365 traders. When we break a demand, we're going down. It wasn't broken by a random candle. It was broken. Look very carefully now. Look very carefully. It was broken by a supply. That is institutions removing an institutional level, an institutional supply taking out an institutional demand. They use the demand to break the structure. It's the same supply now pushing price back. So now 14,500 is such a psychological level for the markets, because markets are like, damn, the bulls lost, and the bulls lost because the sellers literally, you know, back in those war days where they would come to your gates to attack you, sellers literally came and sat on top of a demand and broke it. So I can see this white line here is a historical trend line. It's a very old trend line. The older your trend lines, the stronger they are, the more significant they are. This is the last trend line holding price, because if price breaks out of this trend line, all I'm seeing is doom and gloom. All right, this trend line is from July and June 2020, and then September 2020, and then a final confirmation October 2020, which is all we needed, and then price started to move. So this is my main channel, 1, 2. Inside here with another steeper uptrend, but in terms of my main channel, this line here has been breached. That's a problem. For me, that's a big problem. That's a big problem. And I wish in my personal accounts, I wasn't just telling you guys on the Telegram group, I'm sensing a market crash. Remember, I've been preaching about this for a very long time. I wish I'd started selling there as well. It's just that I can make these big, bold moves on corporate accounts because the capital there is massive, and it's a positional trade. So it really takes a lot for me to even feel like I'm wrong before I even move. And generally speaking, the capital there and the leverage you use, all that stuff makes sense for the risk we take there. Right. So I wouldn't be surprised if the next 2 to 3 days markets give out bullish vibes, right? If you're in those 13,800 levels and markets give you bullish vibes, just consider taking profit here. Consider this, and then consider trying to have another Nasdaq buy trade that you're going to hold for long term if markets allow. But I definitely can see this really happen. I can see this and then a tank happening, right? Could be a tank into these 14,800 levels and then price returning back, or a deeper dive, right? Just depending on the sentiment. Ladies and gentlemen, this is the end of War Room number something. I don't even know. 53, 54, 54. Thank you so much for tuning in. I appreciate those of you who stuck around till the end. I appreciate those of you who watched or going to watch tomorrow, etc., etc. Registered students, tomorrow is Monday. My schedule is clear. It is Valentine's Day, so we're going to do something quickly in the morning. But from about 12 p.m. up until 10 p.m., I will be working through all the trading ideas I've been given out in War Room 54 today, 53, I guess, yesterday, and 52 last week. And then I'll be generating a new set of pending orders. So if you're a registered student, on Tuesday morning, Tuesday is just a better day. Check this list here where we're recording all our trades, just to see what pending orders are in. I will come up with a code. I'll let you know about the code of what's new, what's not. But yeah, I appreciate your guys' time. Thank you so much. And everybody have a good night. Good luck, traders. It is new territory. It's almost like learning how to trade for the very first time in your life during COVID when markets were crazy. It's like trading during the 2008 crisis. What I can tell you and what I'd like you to have confidence in is my entire trading strategy and research is based off the 2008 financial crisis. Now, while everyone is a genius during a bull market, my entire edge is around capitalizing around crisis. All right. So I am hoping that this market doesn't do anything out of touch than what I'm used to, right? I will be very much active on YouTube on the private group students. You're going to get, your own private content that should help you, especially with investors, right? So we're going to be looking very much this week into the crypto market and what I think we should be doing, because like I said yesterday, this coming week, I'm going to de-invest a little bit so I can be 60% cash. I want to hold some cash now. I want to increase my cash flow so that when it's now time to buy dips, I am very much ready for it. Thank you so much, everybody. Have a good night. God bless. And yeah, we'll be in touch the next time I'm online. Cheers, Titus. Appreciate the comment, buddy. Please don't forget to like. If you haven't liked the videos, please don't forget to like. Please don't forget to like. And good night, everybody. Goodbye. Shake my hand, man.